think we are good. Sorry for the voice. It is pretty bad today. But let's just do this. All right, so we are live. Check 1, check 2, audio. Looks good. Cool. All right. Excuse me. Whew. You're gonna have to bear with me for sure on this one. Anyway, so Monday morning meeting once again. Typically, this is, if you're new to this, essentially, if you're working at a brokerage or any kind of professional firm or any company in general, you always have a Monday meeting, and we'll go over really what we would expect for the week, what we need to watch out for as we go through the week, any kind of market moving potential events, things like that, and that's and some of the recaps from the week before. So that's what we're going to go through today. Before we get started, just have to point out options are not for everyone. If you are new to options, we are an options trading group for the most part. You want to call 1-888-OPTIONS and get a copy of characteristics and risks of standardized options before you start trading. So that said, I think big kind of recap last week. We had a lot of stuff going on for sure. Oil was a big mover. Nat gas was actually another really big mover. So I think we're at about 7-year highs last week, and we were talking about, I don't remember if it was Chevron or Exxon CEOs on one of their earnings calls calling for $100 barrel oil, and here we are sitting at about 91 and change. So pretty close on that front for sure. A lot of euro inflation moving a lot of the commodities, things like that, and we're going to go into some of the rate hike discussions and Fed discussions as we move forward. There was one Philly Fed president calling for 4 rate hikes. I think Morgan Stanley, Bank of America, it's about in line with most of the other estimates. I think we're either somewhere between 4 and 7, depending on who you're talking about. And one thing I'm really watching right now is this 2 to 10 year yield curve. So right now the curve is tightening, and what you can see by that is, so the 2-year interest rate is up 1.16% versus 0.73% the year before, 2021. That's a 60% increase in short-term yields, and the 10-year is barely up, right? 0.3%, 1.8 from 1.5, 20% increase. So the difference between the two is called the curve, and that's what we kind of watch in terms of an economic sign and what you're watching for. Essentially, this curve has inverted before every big recession since 1955, and that's why it's a big deal. So kind of like TA in general becomes a self-fulfilling prophecy. When you see this start to happen, you just kind of want to watch out. When we get into the charts today, you'll see, hey, look, there's been a pretty steady channel that we've been in, and we're really just not in it anymore. So from here, we're just watching, hey, look, are we going to reclaim the prior trend, or are we going to create a new trend? So right now, if you're trading, there are things like swing trades. It's been insanely hard, especially as an option trader, to get any kind of, swing trades, usually 2 to 5 day trends, and they're very difficult to find. I mean, last week we had a little bit, but again, it's kind of a rarity. So if you're swinging a lot of things out there for any considerable period of time, just be careful, right? Like right now, it's a very choppy market. You'll see a lot of broadening ranges in general, meaning, we're setting both higher highs and lower lows at the same time. So just be very careful. Take profit when you see it, and when you're kind of just below some support levels, you might keep a close eye, see if there's a good place to step in and make a stand. So the biggest thing last week was non-farm payrolls, right? So NFP, non-farm payrolls, is the amount of jobs created in the market by us, by the U.S. government for us. There was actually a big market moving one in TSX, or Canadian uh, uh, CPI or NFP. I don't remember which one it was. All I can tell you is I got slapped by a shop trade that I had, and it was really impacted. So just kind of keep an eye on for things like that. What I can tell you is that last week our NFP expectations was, 150,000 new jobs to be created. That was what was expected. The number came out 467, way above expectations. Absolute market moving event. And not just that, they actually revised a bunch of prior, like November and December, by about 709,000. So this is a big, giant change in what will be expected moving forward. This number is how many jobs were created. So as we look into the numbers, you start to see these weird things. Well, okay, so yeah, we've created all these jobs, but we also know that we've been creating jobs, but people haven't been taking them, right? And this is where it gets really weird when you look into these numbers. So this is where the biggest impact was: growth in leisure and hospitality, professional services, and business services. So the services sector, which has been hit the hardest by COVID, that's where the most growth was. That's good. That's good for small, medium cap companies, and like the smaller ones. Not really going to be a big market moving event for any of your mega cap companies or NASDAQ 100, US 100, Dow 30 type companies. Unemployment rate, and this is where it gets really weird. So, okay, we created 467,000 new jobs, but unemployment went up. This is where it gets to be, okay, well, how does the market digest this kind of data? So what we know, market does not like uncertainty. And so this week, I would actually expect more digestion. That said, so we're looking at things like participation rate, right? So slightly up. This is a big jump in new jobs created. Now we want to see, okay, are they going to take the jobs? That's the real question. Well, unemployment's still going up. Participation rate slightly increasing. So, well, this is a huge number, completely, out of left field. I think really what it is, it's a lot of companies opening up and old jobs coming back on, if that makes sense. Now, the question is still, are they going to take the old jobs that are now back online? So far, not so much. Here's the problem: wage increases. All right, well, wage increases up 0.7%. That's not a huge amount when we start looking into something like inflation. Well, inflation, we can go into it later, but it's up way more than that. So that's the problem, right? Although, yes, wages are going up, but it's not going up fast enough to offset any inflation costs. And so while we are creating new jobs, it's still not enough for people to entice people to really come back into the labor market. So those are the things I'm going to be watching very closely as we move forward. There's a little bit of data coming in. We get CPI this week. We're going to go into that. We got some kind of, side note type stuff. So Super Bowl coming this weekend. I think I heard a lot about some crypto commercials coming out. They're paying about $7 million for a 30-second spot. So there you go. The other headline that's kind of been popping up: National Security Advisor warns of Ukraine invasion. So NATO and all that kind of stuff. I don't know if you guys know, Russia's all up on Ukraine. Ukraine's part of I think it's NATO, right? NATO. And we don't want Ukraine to be invaded. And if that happens, then I think that we might have some potential volatility spikes as we move forward. So just something to note, keep an eye on. We're going to go through some levels. But those are the major headlines. I think non-farm payrolls, employment rates, participation rate, really, and inflation remain top of mind for the market and any kind of participants in right now. So everyone's still kind of high alert. I think this huge uptick in jobs creations and the revisions for November and December is just going to be a little bit of digestion for the market. And so, which leaves actually earnings the back half of earnings season as we get through this to be really the major market moving events. So in terms of earnings, here we go. So we have 736 companies reporting this week. So last week we had Honeywell and Merck both beating expectations, which puts our total for this quarter at 18 companies beating, four companies missing: IBM, Boeing, 1, 2, 3, and Chevron. This week up on deck we have Amgen, Disney, and Coke. So Disney will be an interesting one. Coke, consumer staples, we'll see. It's kind of run a bit, but there you have it. Amgen could potentially be interesting, but as option traders, we don't really have a whole lot. Again, so this is what we're looking at. So this week, white is really like, low economic data day. Red, big days. So really two big days, Thursday, Friday. I don't know why it always happens back half of the week, but that's how it is. Core CPI is our core inflation rate, and then Friday we have consumer sentiment as well. Today, really nothing aside from vehicle sales and wholesale inventories. Economic optimism, maybe. We'll see. Wholesale inventories doesn't really move markets lately. Just check to make sure, did this come out yet? So this week we have, actually we got, oh no, nothing. Consumer credit comes out in a few hours, and vehicle sales after market close. So nope, nothing really. Some earnings today. We can go through those later on if you want, or if you're in some of the groups, we'll take a look. If I do have some of the IVES trades, I'll go ahead and post those, just since there are a lot of people that have seen that now, and they'll know how to use it. So Tuesday, this is balance of trade is probably the biggest thing. Business Optimism Index. I haven't really looked at this before, but figured might as well put it on here. Sometimes the note auctions actually do move markets. So one thing to note here, right? Economic Optimism. Yeah, I have this twice. Oh, these are just two different organizations posting this here. So earnings on deck, 184. So that's a big earnings day for sure. Wednesday, that's probably the biggest earnings day of the week. Wholesale inventories, one of the bigger things. If you're trading, WASI's like commodities report. So if you're trading futures on like corn, grains, things like that, lean hogs, those are actually moving pretty heavily. Just side note, we can take a look at that later if you want, but probably not. That's more kind of advanced trading. Excuse me. We have one speech, Fed Mester, and a 10-year note auction Wednesday. So that's pretty much the light days. Thursday we get into some serious data, and this is going to be our core inflation rate. Again, sorry if I didn't mention this. So time zone here is Pacific. So apologies if you're not on the West Coast, but you can make your adjustments for that. And what I have on these columns, first column is the previous number, and second number is the last column is either consensus or forecast. I'll just kind of blend them here. What we can say is that any number that comes in around consensus or forecast, that does not move markets. The only thing that moves markets are things that are unexpected. So something like a non-farm payroll report that's coming out last Friday that was way out of left field, that's going to move a market, and you'll see that definitely moves market. Core inflation rate is probably the biggest, most important one. That's technically the Fed's guide to, in terms of what are they watching. This number, here's your math, right? So consensus 5.9, if you look at, we went back to the job increase, so 5.4, and that's a negative number, right? So until this comes down, this is supposed to be at like 2.5, right? That's what the goal was. We're way beyond that, almost, just way beyond that. So this is what the Fed's mandate is, really just bring this back down somehow while promoting full employment. So again, we'll have actually jobless claims, which has not been moving markets. We'll see. I think maybe continuing claims might be a factor. Hopefully that drops a little bit more. I mean, now that we know, hey, look, we got a ton of new jobs, the question is really going to be, well, are they taking them? And so I think this week we actually might get some movement on jobless claims, which, the last few months actually has not been moving markets. So that's that core inflation rate, jobless claims Thursday. We do have Fed bond purchase program, and this is the whole thing. Hey, look, the Fed says we're gonna bring down inflation, but yet we're gonna purchase $3.2 billion on Thursday, and we're gonna keep that schedule as is. So, that's the weird stuff that the market's still trying to digest. And honestly, how do you control inflation while you're still printing that kind of money and people aren't taking the jobs? So, funny balancing act that they're working with, no question. There is some stuff, nat gas, again, we went over, that moved 30%, so could be something to watch for sure. Friday is not as important as Thursday, but this is typically a market moving event for sure. So Michigan consumer sentiment, right? So this is how do consumers feel in the economy, right? Are they willing to spend? Are they happy to go to work? Those kind of things. That's what we're really looking for. And we actually have a monetary policy report. So what's the Fed's plan moving forward? This might be actually a pretty market moving event. So back half of the week, just be careful. A lot of day trading for me typically and the crew Thursday, Friday. So high likelihood that you'll see more of the same there. In terms of oil, so we got so Baker Hughes every Friday reports the total rig count, right, which is 497. This with oil trading at $90 something a barrel. Why wouldn't you turn on your rigs? This is slowly increasing now. So this total rig count, which includes like nat gas, things like that, and oil rig count right here, so separated. Very, very low earnings day on Friday, as is quite typical. And then as we move forward for the week, we have every Thursday one more options course. This is free if you guys have the bot in your server. So absolutely we'll post a Zoom link, check it out. Really what we're going to be going through is neutral trades, things like iron condors and iron butterflies. I actually had more scheduled here, but with an hour, I think I've seen a lot of webinars going out, so I don't want to be like webinar overload for you guys. Kind of slow it down and at least slow down the topics inside some of these things, so we're not trying to cover a million things in such a short period of time. So that said, we move on to the market and just get into a basic sector check. So what I did here, this is my daily view every day. If you're trying to be a trader full time, you have to have this as your primary view. Me personally, I'm sitting in front of 7 monitors, so most people don't have that luxury, but it's part of the process at a minimum to be checking this kind of view. So S&P 500, NASDAQ 100 of the Qs, we call this the diamonds or Dow Jones, and mid-cap Russell 2000. These are my top 4 main indices. Right now I'm watching Bitcoin, big move right now. TLT is the 20-year bond, not the yield, but the bond itself. So inverse relationship to the yield. Crude oil, big factor in terms of inflation and sector moving for sure. And as option traders, we always need to have the VIX on our radar. So if you're not watching these things, again, this crude oil, Bitcoin, that can be interchangeable. You might, sometimes I'll put like the Dixie or DXY or dollar index, things like that. Right now I have this set on 30-minute charts. I do not have extended hours on, but I do have this little blue bar that represents session breaks today. So what I want to do is just kind of go through some things and show you guys, hey, look, I marked out a handful of things. So we have, when you're doing your technical analysis, and I'll take some of these moving averages off because they don't really matter that much. to me. When you're doing some of your technical analysis, you really kind of want to have a good gauge on fundamental market moving events at the same time. So if you've been trading for a while, you'll know, hey, look, fundamental events actually supersede technical levels. And actually, they create technical levels. So to that end, this is Friday's non-farm payroll report that the market digested. You can see things like this show up in FOMC minutes. Absolutely non-farm payroll typically. You'll see this kind of reaction to the NFP, and then you'll see these create these kind of levels right here. Look, so here is the speech, right? Economic event, Powell testimony, creates this little kind of level of market digestion. And what happens? Well, it becomes like a support / resistance natural level. So that said, I think this is going to be something important. I don't have this marked, but I will mark this. Like an important kind of level, right? Boom. Right there. Check that out. So here is where market was kind of chopping around. High end. Here is the first FOMC minute. Non-farm payroll. Right here is that big digestion point. And there you have it, right? So Paul kind of came in, tried to save the day, and once we broke down, retest, and this, based on January's initial NFP reaction, kind of told you, look, the rest of the month might be a kind of a downer. And that's basically what we got. So we have one more market moving fundamental data point, and that was last Friday. So, well, yeah, I think we're a little oversold here on the indices. We could have seen, look, there was a big level, and we confirmed it right here on Friday's non-farm payroll. When the market stopped selling off, and as a trader, you're looking for changes in momentum. So here's an example of a change in momentum right here. For the first half of January, what we were doing, we were setting highs towards the first hour of the day. And so let's say this is the first hour. Call it right there. Turn this magnet off. That's the first hour of the day. Okay. Give or take. Right there. If the high set in the first hour, that's not a good sign. And almost all of January, here's the fifth FOMC minutes right here, highs in the first hour, and we closed towards the bottom half of the range of the day. Highs in the first hour, way towards the bottom half of the day. Highs actually never made in the first hour, never really closed above that. And that's how you know, hey, look, you're in a trend. Over here, you know, the low was in the first hour, so you could have seen, well, maybe we'll have a day. But this is what I'm talking about. It's very hard to find a swing trade that's going more than 2 days at a time, and then immediately high in the first hour, low in the back half, right? That's what we don't want to see. Around, what day was this? Towards the end of the month, that's when we started to see a little switch, right? When you see the low of the day made in the first hour, made early, and then closing towards the highs, that's when you know, okay, well, market's trying to tell me something. The momentum's potentially changing. So again, here, low first hour, close towards the high. And we got, actually, from that kind of visual, we got a 1, 2, 3, 4-day trend, which is about the most that I've seen lately. As we move in, so now we're starting to, we got this non-farm payroll, and we created this kind of bottom, right? So what we're looking for, we had that trend. Now we actually got a low on Friday, made in the first give or take hour, and we closed towards the highs. So today we're looking for a low in the first half of the day, and we're going to see, hey, can we close actually above, you know, the highs of the day, which right now are at 450, and it doesn't look like it, but we'll be watching out for the rest of the week. And so until we can get above a close above that, you can't really be super bullish. I'm not actually going to be very bearish either, because we have this data point, right? So non-farm payroll came out Friday, and then we bottomed right around 444 on the SPY. Happens to coincide with the pivot on back half of January. Let's see, does this pull back? Yeah, like if I could take this also and say, hey, does this match another pivot? Yeah, well, okay. I didn't know this, but it absolutely does right here. Kind of these low volume levels, gappy levels. So if we get a chance this week to buy the index somewhere around 444, that's when you kind of have to take a shot. If you're a trader, that's where you take a shot. This orange box right here, this is the length of an average week. So this week, I would assume that we do get an opportunity somewhere around this level to buy the index. I might actually take another point right off here, and we'll call that little zone like the watch zone, or like potential buy zone, somewhere in here, just like that. So we're not quite there yet, very close, but a bounce anywhere between 448 and 444. I'm going to be looking personally for 2 to 3 candle setup, candlestick setup. So I'm using candlestick candles here, clearly not the HA candles or something like that. And I'm going to look for it around these kind of levels. So that said, that's what I'm looking at this week. In terms of high end of the range, this is last week's high, 458. And so that would be kind of my trading range. Anywhere, something in here up to there. Oops, not there. For the week in terms of a swing. What I'll really be looking for is, hey, look, if I'm going to open a swing, I'll typically open it towards the back half of the day, and I want to make sure that we're closing above the lows, and I want to see the lows being made in the first half of the day. So those are my levels on SPY. Low end target, looking for reversals around 440, call it 445, just for round numbers. And similar on the Qs. So we can see same data points, right? So what can I do? Here is that kind of non-farm payroll digestion point right here. The breakdown, retest, fail. Well, that's a big fail. And very similar, here's non-farm payrolls. This I can actually move down somewhere around here, which gives us about this almost exact average week's range. So could I potentially take a point somewhere around there? Yeah, I like this. So we got a nice little double bottoming kind of situation. Any bounce down in this 355 range, that's what I'm going to be looking for. And again, I'm looking for something like that for my tradable range just this week. Not looking at anything further than that. And that's, again, using this fundamental kind of data point, right? Where you can see this is where buyers really started to step in right on for 352. This really was like, hey, look, where this is where buyers said, well, this is an enticing level, maybe a little low, and I'm going to come in and take a shot. So we would assume that they're going to defend that same exact level this week if we get the opportunity. Otherwise, looking still kind of choppy, right? So the VIX trading to this level, by the way, anything around 20, below 20 is better. So above 20, really, if we're above 25, I'm not looking to buy a ton of credit spreads or debit spreads for swing trades. You might want to say, hey, look, you could sell a credit spread, you could sell on the put side and or the call side, and we'll go through those in this week's option course for sure if you're not familiar with those type of trades. But look to sell more premium than buy premium when the VIX is above 25. So again, same kind of data point, right? So where did buyers step in? I got this level right around 348 on the diamonds. So similar situation, right? Kind of high here, defended here. Right now we have a lower high, so I would expect that we're going to sell off a little bit. And then I'm going to be looking either today, maybe tomorrow, for a bounce around this kind of level on the diamonds. IWM's kind of been more interesting. I'm going to pull this one back just a little bit just to show you. We had this huge consolidation range on IWM. And again, here you go, these 1, 2, 3 economic fundamental pivot points that create a level, right? And what is that level? That level, non-farm payrolls. So mid-cap, smaller businesses definitely affected more by these kind of things, inflation, etc. So here's that level 216. Orange lines for me are prior week's high and low. And again, here's our non-farm payrolls Friday. So right around 195 on IWM, I'd be looking for kind of a base to play out. Ooh, look at that. And on this one, I see a nice little, do I dare say, who knows? You guys decide what you want to see. But could be a little something like that, which, again, first trading target 203 after a bounce around 195. These orange boxes are an average week's range. So would I be trading to 216? No. Personally, I would not be. Not this week, that's for sure. I'm only gonna. It's been so hard to get a trend on, for a swing trade. I wouldn't dare go that far personally, but we shall see. So all very similar data points. Again, just putting that little fundamental pivot on the chart as like a time marker to show you where buyers were really stepping in and defending certain levels. So those are the major indexes. Again, VIX, you can kind of see all of the same, but this is where we are, right? So 20 on the VIX, low end. Do I still expect to see some kind of potential move? Where's my tools for drawing? I don't know. Do we see a potential pop like that? It's very possible, right? So we got this bounce. We got something like that. I hope we don't see, something like that. But is it possible? Yeah, absolutely. Do we have some data coming that could create a situation like that? Yeah, we could. Definitely earnings. So at this point, anywhere around 20 on the VIX, I'm actually going to be long volatility. So here we go. This is actually a bigger one. So this is the 20-year bond. And again, marking these fundamental points on the chart for you, just to show you what's going on, right? We have FOMC minutes, non-farm payroll, and this was a Powell testimony. Since it's his market, he's making this situation happen. And there you have your levels. Once again, see how this, like every time, the fundamental events are important, right? Technical traders, I don't care how good of a technician you are, you'll know, fundamental events create the levels that technicians use. And so here it is once again on not an equity, but interest rate product, right? We got this push and we failed. We actually got another push up. We failed. What do we know? We think, so this is an inverse correlation to the yields themselves. Are yields currently going up? Yeah, the market is screaming for yields to go up, which means that the bonds themselves will go down. And so here for me, this orange box, once again, an average week's range. Do I think that we can get down below to about 135 on TLT? Yeah, I do. Actually, probably a layup trade. So what do I want to do? I want to look at 2 points, right? So prior week low, 140, and here's my point right here. I don't know that we're going to get that high, and if we do, I'm going to be a big time seller of the TLT, and I'll short it, right? But for now, like this level, 141, if we get up anywhere around 140, well, let's see. I don't even know if we're going to get that high, but let's say I'll be looking for resistance anywhere around 140, and I'll be a seller of TLT down to 135. So 5-point trade, not too bad in terms of options for about a week's move. That's what I'm looking at. We want to look at Bitcoin? Feel like we should. So funny enough, Bitcoin historically doesn't move with the markets, but I just happen to throw these same data points on here. And look at that, right? Like, that's crazy. I don't know why that would correlate, but it is right now. What I can say is, I'll pull this back a little bit. We are still firmly in this downtrend, but we do have two things to look at. So one, here's this first downtrend on Bitcoin, right there. And yeah, we've broken that, no question. This is an average week's range. And so purple lines on my charts are prior month low and prior month high. Yellow, prior week low and prior week high. Let me make sure I update this. So here you go, prior week, and this was 2 months prior. So prior month low, prior month high. And here we are right now. So right now we have, here's your candle. Okay, we want to watch. Is that a level? Oh yeah, that was definitely a level. Right there. See that? So this is our first bounce off this level. Do I think that we could retest it? Absolutely. One other thing to note, we do have this trend way over here. That's kind of definitely a thing. Maybe I'll just tag this down here. Right, so I like this kind of correlation here. Trend line, arcane, bounce down, bounce up, tag. I like it. So here we are. 1, 2, 3, 4 data points, and our uptrend. Look at that nice little push. Funny how that works out. So could we get a drawback somewhere around in this level? Yeah, I'd be a buyer. Anywhere in here, or at least something to watch. Right, what is this, a pivot right around 40, give or take. So short-term uptrend happening in a longer-term downtrend. A lot of times when you get this situation, and you'll see this in equities, is that you get a quick kind of break, and then you get a pullback. So breakout, right? And then anyone that missed it, I don't know, how much truth there is to that. You might get a lot of people that were in here, maybe that were buyers, and have been stuck in like a pretty big drawdown. They might see this, oh, I need to pull some money out here and finally getting a move up, and maybe kind of weak hands kind of stuff. So can we get this kind of situation? Yeah, for sure. So I'm not rushing in. I wouldn't be worried if I wasn't super long any crypto assets right now. I think you'll get an opportunity that's a more tradable pullback if you missed it. If you caught it, maybe think about taking a little bit of profit somewhere now and looking for re-entries. So this blue line is a 50-day moving average. White line is 20-day. So anywhere, any one of these kind of points could be a pretty nice pivot. So 42, 41, those are going to be my first signs. It'd be nice. That would actually be a pretty strong bounce if we get those. I think I'm just going to move on. We're getting 850 almost. So this sector check really quick. Ooh, we had some stuff that was looking strong. Semis were looking real strong. When we get a reversal here, looks like it. So again, 30-minute charts here. I don't have those economic fundamental data points on here, so apologies for that. Yellow lines are prior week's highs and low. Purple lines are prior month high and low. So what do we want to look at here first? I think semis look strong out of the gate today to me. Let me just throw this back on standard hours. So Friday, actually, so this was Friday, right? So we'll take a look. So Friday NFP, here we have, look at that, same kind of point, same kind of level. So if I get an opportunity to buy semis somewhere around here, I think I'll definitely be in the market. I like this 271 type range. If you don't want to get an index overall. This is just, hey, look, the sector. We want to take a look at the sector, and then once we have the sector that we want to be in, then we can kind of go into the individual equities and pick our best of breeds. So retail, semis, oil services. Oil's been on a tear. XLB is the materials sector. Healthcare, consumer staples we want to take a look at, because that's we got Coke. Financials, interest rates go up, financials typically go up, and energy also on a tear. So let's look at staples. So again, here's that same Friday kind of data point. I'm going to use a horizontal line just because. Is that a level? Yeah. Look at how cool this is kind of lining up. Man. So yeah, maybe we kind of exploded out of the gate, but generally speaking, this is a nice little potential reversal pattern across the board. You don't have to be in a rush to grab any of this stuff, but I'd be picking things off maybe towards the bottom end of this range, something like that. Might see a little fake out. That would be very normal to see something like that, actually. So I think staples are good. That's actually most of them sectors as a whole. What looks the strongest still? Energy. We don't have any of that kind of stuff, right? It's just new high after new high. So where do I want to be? Something like this. I want to be oil services. We're pushing up actually really nicely against prior week high and above a major pivot here. If I pull this chart out, you guys will be shocked. Look at that. How much room do we possibly have on this? This is a nice one. So oil services, think Halliburton, Schlumberger, things like that. That's what goes in here. Energy is more like a Devon type trade, but also very similar. You got to pull it back. Sometimes we don't see this stuff, but it's important to note, right? 77. Don't get stuck on your 15-minute, 1-hour charts. Sometimes this is more investment type view, but it's important to have an idea of what that looks like. All right, I think I want to take a look. Ooh, voice came back for just a second.
For just a second.
Just a second. Ooh, it's better. Yeah. Tisla. Who wants to do Tisla? Let's do it. All right, so let me clean this chart up. You guys don't need to see all that shenanigans. All right, so purple lines, prior month, high, right? Here's the monthly candle, high, low, right? Weeks, prior week candle here, high, low, and day, right? So right now, you got any levels here? Stefano?
I was looking at like 943 this morning, kind of where we rejected, and then on the low end, like the 885 to 890 area.
Yeah, so 943 on my chart lines up exactly with prior week high, right? So that's why these levels are super important, right? Would you potentially see this? It's a pivot, right? So could have gone two different ways at these levels, right? It could go, right, and get rejected. Or it could go, you get higher, don't need to rush into it, and you'd be looking for a bounce. It could have done that too. Right now, we clearly rejected. Here's yesterday's high, right? So trading range, you could go yesterday's low. Oh, and you said 890 something?
Like 885 to 890.
So interesting enough, Steven's pointing out, and so we don't do anything really before this. I have a level 886.12. That's like a purple dotted line. And for me, what that line means is it's not last month, but the month before is low. So that would actually be December, right? Which is, boom, check that out. So right here, this is a monthly candle, right? February, January, December, low. And so, yeah, that's definitely a point of interest, let's say. Also happens to coincide, what is that, February? Are we going that a year ago?
Mm-hmm.
Oh, major supply zone. So this is major supply zone. Anyone that missed this kind of run up might be looking at this. Maybe they sold around here, 900 bucks, and they missed this little run up. They might be thinking, might be a good time to get back in, right? Just psychologically, right? So these levels, they matter for sure. So yeah, anywhere. And then so prior week low, we got 860 non-farm payroll defended level, right? Here's Friday, right on that 885, 886 level. Yeah, I like that level. So trading range right now, we know 940 is resistance. Cannot go long above that until you really hang on to that level. For now, look for maybe a bounce, right? Nothing major, but could you stretch it to that? Yeah, sure. Typically, I won't. I don't think Steven does either. But if you caught a bounce here, right, you want to just look, what's the next pivot? Is $5, $15 enough to trade on Tesla? It's a scalpy trade, but it's possible. Definitely, you have this level from this morning, right? And Friday's close, right at 921. So if you get a bounce around 885 and you start to head higher, you could probably take that to just over 900, maybe 915. 920 is a pretty critical pivot if I remember right on good old Tesla. Yeah, pivot. So definitely level of interest 920. So 885 to 920 on the high end. Or short 920 down to 885. That works too. Let's see. Let's take a look at AMD, right? That was on the list. I know Sevy's looking good this morning. We got a pivot Friday's high, right? 125. Let's do this. I know that was your level you were talking about earlier too. Let me just make this 125. Clean. So that yesterday's high, Friday, and here. So at this point, we're looking at two things. We know fundamentally cool. Yeah, semis shortage, so prices stay high. AMD Xilinx fundamental deal is in. That's working. We got a nice little pivot. What is that? 122.60 in August. Pivot here that we just bounced off. Look at how nice those kind of match up. What is that? November pivot 118. Boom, slammed right up on that and turned right around. So what can we pull from this? Again, Fed NFP low here. So the reaction to non-farm payrolls this month was good, right? So generally speaking, for this month, I have call it a non-bearish bias, which means that I want to be looking for support levels to buy, right? And maybe just up to the next kind of resistance level, because I don't think with this kind of data change we're going to be exploding in any one direction or the other. So I think small moves, conservative stuff, just taking prior week's ranges is the safer route. Very small positions and trading for smaller moves. So 125, I think, yeah, very clear level. Support here, January. Big level here. Resistance here. So this is clearly resistance, breaking resistance now. Are we looking at a potential entry? Yeah, I think we could be, right? So what do we want to see? We want to see for sure a close above 125, right? For some kind of potential tradable range. This week's high, prior week high, is only 129. So this kind of turns into more of a scalpy kind of day trade to me. What do you have on your levels right now, Steven?
Pretty much the same thing. So that 122, I have it as 122.50 from August of last year, I guess that is.
You're going way back.
Yeah, like 118.30,
Oh, I see what
118.40.
you're tagging. You're tagging
Yeah.
this guy right here.
Um,
Post
at
earnings.
125 was more of an intraday
Yep.
level, and then we got a bounce early January at that level too.
Yeah. Right on here.
So I
Jan
think
10.
I think I'm looking at the exact same levels you are.
Yeah. And I think this is one more example. Here's so earnings, right? So fundamental events create technical levels, right? So after a fundamental event, what do you typically see? We'll see this kind of chop zone, right? And so what this is like the market repricing. What do I value this equity as, right? Whatever it is. And so we'll kind of get this consolidation or digestion moment. And once the market decides, hey, look, you can see where did buyers really step in, right? Well, they stepped in two points, right? One, right here, big time. So this is 119. Let's call that a floor on AMD. And a big pivot, 122.50, is where it really exploded to the upside and just carried from there. We got another one right up in here, right? So wow, 137, another explosion and defended. So these are levels. This is pretty far back, but did it follow through? Yeah. Defended, 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 right? Broke down, lost it right here. So this is another key kind of pivot. I might even move this down to the low end of that. Yeah. So AMD, we're in a chop zone, right? And we're in a chop
Mm-hmm.
zone that's pretty tradable from 122.50, between 125, 122.50 up to 130-ish, right? So if you get these kind of tradable zones, right? Yeah, I like that. I like that a lot. And I'm really only trading to 130 or like the prior week's high. That's how you got to stay safe. We're not shooting for the moon. We're not going for 200. We're not buying, what are we, like January 2023 $250 calls. No, no, no. We're not doing any of that, right? That's craziness. I don't have a crystal ball. Nobody does. So what are we doing? Trading. We're just taking a very small portion of what is an existing move already, right? And I like that, right? Can we see this play out? I think we have a good shot, right? Here's that support. This is like supply zone right here. Supply zone between 122.50, 119 is where I got. So yeah, I like that. Intraday, yeah, any bounce around there, keep an eye out. That's very tradable. These bands I have, by the way, these are volatility bands. So you'll really see on the hourly, it's pretty defendable. So right now we're about kind of squeezing. IV is consolidating, and this is telling me, yeah, value area for sure. 122, yeah, 122.50, right around there. I think we're just all we're experiencing right now is some kind of like resistance level right in here, which was natural. Now we'll start to see kind of like a wind up before we could do anything. But just careful, right? So here's our supply range. If we get a rejection here, can you see this? Yeah, you betcha. So again, just be careful. We don't ever have a predetermined direction. We're just trading one candle to the next, one candle to the next. So I think that's what I got. Who else do we have? Let's take a look. Let's take a look at Disney. You guys have any requests? Just throw it in the chat. We'll take a look too. So Disney, we have earnings coming up. Do I think this is going to be super volatile? No, not necessarily. But again, fundamental event creates supply zones. Fundamental event. So we can see this is very clearly right around here going to be our resistance level on Disney. Call it right at the bottom of this range, right there, 170, and was a consolidation. Do we have a tradable range? Let's see. We have a gap down on this fundamental event right here, right? And it was defended 122. Yes, it was. Does that match up? Yep. Ooh, interesting. 133. Let's see, where does that take us? Yeah, 133. looks like, again, fundamental events, earnings, 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 creating kind of like value levels, right? Earnings, digestion levels. So here's a trading range, right? Would I suggest trading on earnings? No, not really. But if you see it bounce down around this kind of level, right? And can you use these levels for your earnings trades? For sure. Just a guide. Nothing set in stone. IV is consolidating, but we know we have this February, 3 days from now, event that's going to be increasing IV as we get there. So any short-term moves, definitely tradable. Low end 130, give or take. If we break down below that level, that's going to be very big deal. Yeah, because you'd be looking sub 100 at that point, or 100 really. Who knows? No crystal balls here, but we'll see. Do I have some similar Coke? Coke earnings on deck. Yes, sir. Oh, yeah, consumer staples. There we go. Same thing. So fundamental. Look at that gap. Who'd have thought Coke has a big gap like that? Huh. Definitely does. Yeah. All right, so is this a defendable level? Ooh, it's the far away too. 55. Prior week high. Yeah, careful trading a breakout here. You got a fundamental event coming up that could change the story from a technical perspective. So you're at the high end. And XLP, consumer staples, is the sector consolidating. Pretty good, steady trend, but again, consolidating. So careful. Not expecting a ton of movement this week, for sure. Maybe some neutrals. I think probably safer just to wait till after a lot of these have reported. Those are the tradable ones for earnings. Amgen's really not tradable. No requests. All right, that's what I got for today. I think we're clean, just under an hour. So here we are. We are coming up on some of these support levels, at least on the SPY. Definitely for 43. I'm going to be looking for some kind of bounce around there. Non-bearish stance as we move forward through the week, with kind of warning signs towards the back half for CPI and consumer sentiment. All right, man. I think we're good, guys. Have a good week. See ya.